The true heartbeat of the global economy, the financial oil market, has remained out of reach for most until now. Introducing Onyx Markets, the first platform to bring personal investors into the ecosystem that sets wholesale oil prices around the world. This is where the real economics of energy begin, a market that shapes so much of our everyday lives. Onyx Markets levels the playing field. Access live, tradable numbers from the industry's leading provider of financial oil market data. Whether you're a personal investor or a global corporation, low cost, transparent, and empowering. For the first time ever, you can trade global oil benchmarks like dated Brent, Northwest Europe shipping fuel, and US Gulf Coast propane through spread betting and CFDs. Hedge with precision, trade tax efficiently, and gain unparalleled transparency. Supported by the world's largest liquidity provider in the financial oil markets, Onyx Markets also brings you insights from industry-leading analysts, detailed reporting, and expert-led education to help you navigate this market with confidence. Onyx Markets, the power of the financial oil market now in your hands. Start trading today. Visit onyxmarkets.co.uk.
Happy Chinese New Year, the year of the snake. And look what the snake is doing, just undulating around. And it just wants to get you, doesn't it? Be careful. But don't worry, all you need to do is this, and then you're done with it. I remember my grandma whacking them with a broom. That's all you need, and then you're done with it. Now let's go and visit my colleagues who are doing all the hard work. Let's start with the heavy brain matter here, who is doing a lot of coding, you know, on what? On the new AI. This is the beauty of being young and being well educated, because you can understand all those colors and all those letters that I don't know exactly what they mean. Now let's go a little bit with more depth with the infamous Dr. Wu. He's very gentle despite his cap, and he's enjoying the Chinese New Year, aren't you?
Certainly.
What are your parents saying?
Wishing all of you viewers a very happy Year of the Snake. 恭喜发财.
He forgot this. You gotta do this. 恭喜发财.
Oh, right? Yes. 恭喜发财.
And there's a few accents here and there. Some say choi, some say chai. I don't know, right? But anyway, what's happening in China? Tell us.
Yeah, so it's just been the DeepSeek wave has been taking the world by storm, and seems like there's also some competition within Chinese companies, with Alibaba showing up with a model recently as well. But onto DeepSeek, on Monday the release triggered a huge sell-off in US stocks, especially tech stocks. Nvidia shares fell by 17% in one day, and almost $600 billion of market capitalization was wiped out. Why is that? Well, DeepSeek can generate a large language model which is to similar capacity as ChatGPT or the likes of Meta for just a fraction of the cost, which is quite shocking to a lot of tech investors, because it really brings up the question of, is such excessive spending on AI infrastructure justified? And speaking on the well-educated part, of course, in China, the innovation is quite important, and it comes in the context of US having these implementing export controls. So this diamond was really made under pressure, and a lot of the early founders, the workers in DeepSeek, are educated from Chinese universities rather than what many people assume would be Western universities, which is quite prestigious in Chinese society.
And let me interject there. Last year, China issued more patents in 2024 than the rest of the world. So on that, we would also like to show you a little bit of a clip of how the new Chinese year celebrations were done with the humanoids. They can dance, they can throw things in the air, they can put flamethrowers on their back. I mean, they're a little bit scary and unsettling, but this is the way it is going. And now that we're back from that minor interruption, Here, let's talk to Will. What has happened in the markets, Will?
Yeah, well, it's been a really interesting week. We had FOMC yesterday, which turned out pretty hawkish. Chair Powell and the rest of the committee decided to leave the federal funds rate unchanged at 4.25% to 4.5%. But a lot of the rhetoric that we had seen previously in the committee seeing inflation descending towards target wasn't there. So it's quite clear that inflation is back in the 4 as a focus for the committee. That being said, unemployment does remain very low at around 4.1%, and the labour market remains resilient. What does this mean? The committee has time. We're unlikely to see a movement in federal funds rate for quite some time, with some expecting not until June. Much to Trump's dismay, we might only get 1 cut this year, maybe not even any, should tariffs prove more inflationary. And obviously this has real economy impact. We're seeing credit conditions tighten quite considerably. Mortgage applications fell 2% in January, and that has big knock-on consequences for the construction sector, for petchem demand, all sorts of facets of the economy. Consumer confidence also disappointed at 104.1 in January. And these signs of overly tight credit conditions will weigh on aggregate indicators and macroeconomic performance more broadly, as well as oil demand.
But this would mean a little bit that there's going to be a lot of tension between the Fed and the Trump administration, or Trump himself. I wanted to say it would have been more fitting to have been the year of the dog, because somebody's going to be biting on Mr. Powell, right? Right behind Mr. Powell. But anyway, now switching a little bit more into the oil market to hear rapidly typing Ed. What has been happening in markets? Tell us.
Well, in terms of flat price, it's been a pretty consistent decline since the mid-January peak, where we have all the way up here with the sanctions that Biden left us with, bringing flat price all the way up above 80 again, even above 82 briefly. But since then, it's consistently been coming down. I think the market really wanted to be quite long for Trump. It was hedging its bets in case the tariffs were really, really stringent. So I think a lot of that has been unwinding. And then we've got also a few sharp drops where he's been calling on OPEC. So here, for instance, OPEC, he said, should lower oil prices.
By the way, we all work together in the officials. And we were of the thinking, and we have been very clear, that Mr. Trump wants to do well by his voters, and that means low gasoline prices. Therefore, the premise, and we put this very clearly in the officials' reports as well as earlier podcasts, that being long was being wrong. Because he would push, do whatever he can to pay back those that elected him. So he wants low oil prices. And I think we are there heading towards 75. We almost hit it. And as we roll into the next month, because there is backwardation, we will be in a $75 market. So it's in the bag already, right? And then the question is what happened next? Because if these conditions continue and Europe remains very weak, then we'll see further low prices. One of the things and divergences we are noticing is that the stock markets in Europe are doing better than what the economies are. So I think the stock markets are already forecasting that there'll be a serious change in policy by the leaders in Europe. We are going to have a new government in Germany, 100%. And the Labour government here is already sounding a little bit Tory, isn't she?
Yeah. We've definitely had a change in rhetoric towards a pro-growth approach, and really a lot of the green agenda sidelined in favour of aggregate economic output.
Yeah. So if those things happen, then we're going to have to revisit our forecasts. But as of now, we are between 75 and 72 until the next edition of the officials. Thank you very much.